here. And I just wanted to start off with the U.S. economy a little bit here. And, over the last 9 years, we've seen very low inflation. The Fed is out there telling us they want to keep inflation down. The central banks right now, they are printing money like crazy out in Europe and Japan. Here, it looks like there's an unwinding going on. And there's a lot of different Fed houses within the United States saying that inflation is starting to tick up now. And when inflation moves up, is this good for gold?
It's interesting. The what's good for gold these days seems to be there seem to be as many opinions on it as there are commentators, and maybe plus one. But I think it is. Gold has always been a store of value over the long term. I think in an inflationary time, which is what I think we're starting to come into at the moment. And that's something that a lot of people aren't familiar with. We've been living through such a long period of low inflation that I think people forget what inflation looks like. But I think gold is definitely, and always has been, an excellent store of value in that kind of inflationary environment.
Now, what's very interesting is that gold is starting to tick up a little bit. We're seeing it move up in price. And China, while the BRIC nations, they made an announcement that they're going to start this gold trading system. Do you think this is going to have a major effect on the gold price?
Absolutely. I think, anytime you give that sort of vast population access to being able to buy and sell gold, I think it can't help but increase that pent up demand. And I think it's going to drive gold prices higher. And I think, that's coming into a sort of perfect storm where you're seeing the supply really constrained in physical gold. The new discoveries just aren't being made. The amount of new gold being found just isn't there. And I think, that combination is going to be good for gold going forward.
Now, in the past, we've seen the peak gold. Back in 1900, I should say, in 1912, 1940, 1971, 2001, looks like we reached peak gold. And each time that, the price goes up a little bit, each of these times. The latest peak was in 2001 when production reached around 2,600 metric tons, then declined for a couple of years. Now, production started to increase again in around, I think it was 2009, and we saw gold prices move up once again. Are we headed towards another type of peak gold type of situation?
Yeah, I think we are. The one thing about gold is it's not like a factory. If the demand for iPhones goes up, you can speed up the factory and crank out more iPhones. But, the lead times have been getting longer and longer for new gold products or new gold projects. So it's just not possible to turn the taps on that quickly, given the lead times in terms of exploration and development, and particularly permitting, not just environmental permitting, but getting that social license. So I think, we're seeing, as I said before, we're seeing the supply getting constrained as we go forward.
Now, we also see cryptocurrencies that are out there, and we've seen, people move to the crypto market and they look at the crypto market. I know the Fiore Group, they're behind the Hive blockchain tech, which is the most successful stock in Canada's history in the past 4 months. Let me ask you this. Do you believe that people are going to come back from the blockchain and move back into gold? Do you think people left and went to the cryptocurrency market because gold has been pretty much steady, not really moving anywhere?
It's tough to say, and certainly the spectacular success of Hive blockchain and some of the related companies and the underlying cryptocurrencies has been pretty spectacular. But I think I don't think you're going to see those kind of returns in the long term. I think that's really an awakening of the broader market to the potential of these cryptocurrencies. And I think, I don't think they're necessarily, exclusive. I don't think, what's good for cryptocurrencies is necessarily bad for gold. I think gold is starting to tick up. As you say, we've seen a couple of days over 1,300, which is always nice to see as a producer. But yeah, I don't see the two as being somehow antagonistic to one another.
Now, with your company, Fiore Gold, you've been out in Nevada and you've been mining out in Nevada. Why Nevada? Why there?
I've worked all over the world during my career. I've, been in Ecuador with Aurelian Resources. I've been in Europe. I've been in Africa, and a lot of time in Latin America. But, fundamentally, I think that global experience has really taught me that a stable jurisdiction and one that has a history of mining is really key. It makes things so much easier because, even in a first world country, if you're going in and there really isn't a history of mining there, it's tough to get things developed. It's tough to educate the general public. It's tough to educate politicians and regulators about what mining is all about. And you just don't have to do that in Nevada. I mean, Nevada, I think there's something like 119 mines in Nevada. As of the last statistics out of there, it produces something like 80% of the U.S. gold production. There was over 5 million ounces produced there in 2015. And they're big deposits. They're really big deposits. I think, something like 2 of the world's top 5 gold mines are in Nevada. And so you really can't ask for a better place to work. And it's, again, you're not up in the Andes, so you don't have all the seasonality issues. You're not in the rainforest. It's first world infrastructure there. I mean, you can practically see our mine from a highway that runs across Nevada. So it just really has everything going for it, and a very, very highly skilled and highly trained workforce as well when you do go into production.
Are you looking at any other projects besides Nevada?
Yeah, absolutely. I mean, Fiore has some assets in Chile, some early stage exploration assets that are centered around the Yamana's El Peñón mine, which is their flagship mine in South America. And, Chile is another great jurisdiction. It's, we sort of joke, Chile's the Nevada of South America. Again, stable, pro-mining, long history of mining, and educated workforce and all the rest. And jumping back to the U.S., some of the surrounding states, Arizona, Utah, even parts of California, although a lot of people don't think of that as a mining-friendly state, there are parts of it, particularly along the Nevada border, where people are operating gold mines and doing so quite successfully. So we like that general area.
Do you think this is, since gold, we've seen a height of the gold price back in, I think it was 2009, 2010. And it's come down since then. Do you think this is a really good time to get into gold?
Absolutely. Absolutely. As I say, any time when you're looking at something where demand is increasing, but supply is constrained from increasing as rapidly, I think it's a great time to get into that, that commodity. And gold is certainly at that stage right now, I believe.
Do you also think it's a good time to make acquisitions?
Yeah, absolutely. I mean, there's a lot of companies that are, they're just not getting the full market valuation, because they're small. And this is really kind of our thesis is, right now, we started out Fiore Gold with one mine, the Pans per year mine. It was a mine that we turned around and got back into production and got into profitability. But it's not a big mine, and it's never going to be a huge mine. It's going to produce, it might get up to 50,000 ounces per year if we do everything right and can execute on our expansion plans. But you can't have a company that's based on one 50,000 ounce per year mine. And there are a number of companies just like us in the Nevada area and some of the surrounding states. And there really needs to be a consolidation in there. So you really need to be able to sort of put 3 or 4 of these mines together, get over that 100,000 ounce a year threshold, and get into that kind of 150,000 ounce per year sweet spot, because there's a real jump in valuation once you cross that sort of 100 to 120,000 ounce a year production level. And so I think this is a good time to be doing it, because we've built an excellent operation and development team. I think there's a couple of other companies out there that are struggling with their operations, where if you were to bring a team like ours in, we could get those back on track. And by bolting some of these assets together, really start to, increase the multiples that you're seeing from what standalone single mining companies are getting.
Now, I just want to go back to what the BRICS were doing. Now, they're starting this gold trading system. We also understand that China and Russia, they've been accumulating a lot of gold right now. And we see that all this taking place all at the same time. This would seem to be a very good time to maybe invest in mining stocks, maybe invest in gold. What's your opinion on this?
I mean, a significant portion of my own personal portfolio is in the mining industry. So I'm very heavily dependent on it. Obviously, I work in the mining industry. My wife actually works in the mining industry, and we're very bullish on it. We think it's a great time to be in the space. And as I said, I think the gold price is moving in the right direction, and I think it's going to continue to move in that. And the gold stocks will move in tandem with that.
Can you just compare your market cap with companies who are producing around 150,000 an ounce per year, which is actually your 5-year goal?
Exactly. So, we're looking at, I think as of the last day of trading of 2017, we had a market cap of about US $65 million. And if you look on that on a sort of market cap per production ounce basis, the smaller companies like ourselves, the ones that haven't yet grown up past that sort of critical, magical 100,000 ounce a year production profile, we're getting valued at somewhere around $1,500 to $1,700, a market cap dollar per ounce, per production ounce. Once you cross over that threshold, that valuation really changes. And so essentially to get up into that 150,000 ounce a year production profile, we're looking at a sort of 4 times production increase. But if you look at comparative valuations, companies like Guyana Gold or McEwen Mining or Rocks Gold, what you're seeing is that by increasing our production by sort of 3 or 4 times, you're going to get a market cap multiple increase of somewhere between 6 to 12 times. So there's a real jump, a real step change as you cross that 100,000 ounce barrier, and that's why we're aiming for that sweet spot.
For many people, they hear gold, they hear silver, they hear copper, they hear all different types of precious metals, and the corporate media, especially the central banks, they tell you gold is no good, you shouldn't own it or anything like that.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say treasury bills are money? I don't think they're money either, but they're financial
asset. Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Some people still think it's money. I yield back. My time is up.
Why is it very important to actually own gold?
Well, I think the nice thing about gold, and particularly physical gold, is that it's a commodity that you can hold in your hands. And nothing's going to happen to it. It can't be artificially devalued the way a currency can, a fiat currency can. It can't be the regulations around it. I mean, you can always make owning gold illegal, but even then, it's in your hands. So I think that's key. And I think it over time, it's really shown to maintain its value over the long term. Again, a very, very good hedge against inflation. Something that I think a period that we're going into now, increased inflation.
Now, if we see an increase in inflation, and you just said you're seeing inflation come, how is gold going to actually protect someone when inflation comes?
Well, I think if you look at gold, as I say, it's always held its store of value. I mean, I think the sort of, common story you always hear about gold is that, gold has pretty much always been able to buy a decent suit, a decent business suit, regardless of, what currencies are doing, what inflation rates are doing, and so it's been able to hold that store of value. And unlike paper currencies, its value can't get inflated away.
In Nevada, you purchased a $200 million property for what was like $5 million, which was like a 97.5. How did you do that?
This was really a testament to a guy named Ken Brunk, who's our chief operating officer. And he put together a private company that was specifically aimed to pick up these projects out of a bankruptcy situation. And there was a couple of projects. The Pan mine was the operating mine, and there were some nearby exploration projects that have a lot of potential centered around past producing mines. But ultimately, Pan was the kind of key point in there. And to understand the story, you kind of have to go back a couple of years when Midway Gold, which at one point had been a $300 or $400 million market cap company, they had put Pan as kind of their flagship project and been trying to put it into production. But they really got saddled with a combination of too much debt and a controlling shareholder who really didn't understand the mining industry but wanted to have a lot of hands-on active role in managing the company and how that mine was built. And so what happened was, as that mine came into production, They had a big debt overhang. They got into some production hiccups, which can happen with a lot of mines. Not every mine startup goes exactly according to plan. But the problem was with that debt overhang, with that controlling shareholder, they just simply couldn't get out from under that debt. And they poured first gold at that mine in March, I think, of 2015. And by June or July, they were filing for bankruptcy. And I think that a lot of people got scared that they thought the underlying asset was the problem, when in fact, Ken Brunk, our COO, recognized that it wasn't the asset, it was the way that Midway had tried to put it into production. And so, he put together this private company, bought the asset out of bankruptcy for $5 million US, invested about another $19 million in really turning it around, solving the problems, the operational problems that had caused the mine to go bankrupt, had put together a really, really experienced operating team. And those guys have turned that mine around and can see that, in about a year, they were able to take that mine from essentially a mothballed asset that nobody particularly liked to a profitable producing mine.
What are your 2018 goals, your milestones? And where do you see gold and the precious metals market, the mining market? Where do you see it all going?
I think, as we go into the new year in 2018, we're seeing the start of what I think is going to be a long-term uptick in the gold price. Obviously we've broken through $1,300. We managed to hold there for a few days, and I think that's going to continue. As for where it's going to end up by the end of the year, that's a tough call to make. But in terms of our company, that's something we can control, and I think we really want to execute on our strategy, and that strategy really has three parts. The first one of those is to get the Pan mine, build on the base we've done and get the production up a little higher. We want to look at adding a crushing circuit to the mine, which we think will increase recoveries, and ultimately we want to try and push those production numbers up towards 50,000 ounces a year, which is probably about the maximum that this particular mine can do. We'll be drilling as well on that project, and growing organically by doing that. The other way we're going to grow organically is to continue to explore our Gold Rock project. Gold Rock is an adjacent property based around an old 1990s Bre-X time gold mine that was mined for a few years, but there's a continuous trend there about 10 kilometers long that cuts through our property that's been really, really underexplored, and we're very, very keen to get in there and start drilling on that, and we'll be doing that as soon as the weather starts to warm up in Nevada in a couple of months. And that exploration trend, as if you follow it to the north, you run into Kinross's Bald Mountain mine, which has about 2.2 million ounces of proven and probable reserves, and that's probably why that similar geology and being on that trend is why Kinross actually participated in our financing that we did when we acquired the Midway assets. So they came in for about 9.9% of the financing. So they're a major shareholder of ours and very, very supportive. So it's a combination of pushing up production as much as we can at Pan, getting the Gold Rock property into production, exploring that, getting into production. And I should add that that's an interesting project in that we're probably going to have our federal permits for a full mine build on that mine in Q1 of 2018. And so we'll be in a kind of enviable and unusual position of having a permit for a full mine build before we even have a PEA or a pre-feasibility study out. So we're going to be pushing that along, but the timing will be under our control because we'll have our permits in place, or our key federal permits in place already. And then, finally for, I think we're 2018 milestone 20, I think we're going to execute on our consolidation strategy. We've already had a number of conversations with various companies in late 2017. And now that we've got Pan up and running and working well, I think we're going to start executing on that strategy and start putting together some of these smaller projects and working towards that 150,000 ounce target that we've been shooting for.
Now, you've been a geologist for over 25 years. How much gold is out there?
Well, I can tell you from personal experience, there are still some big deposits out there, and there's still places in the world that have not been fully explored, but I honestly believe the easy deposits, the ones near surface, the ones that you can stumble over as you're walking along with a hammer and a sample bag, Those ones have been pretty much found. I was involved with the discovery of the Norte project. I was the VP corporate development at Aurelian Resources. That was probably the biggest find of probably the 2000s. And that one was tough. It took some real skilled geology. I mean, the top of that deposit was several hundred meters down below surface, and it was only the barest sniff of a deposit at surface. There's some trace element geochemistry, not even gold, but just some trace elements like arsenic and antimony that we found at surface that led the key geologist, Steve Leary, to believe that there was something buried under those younger sediments and drill that first hole and hit the Fruta del Norte deposit. And so it's tough to find these deposits, and it's getting tougher. And not just tougher to find them, but tougher to permit them, tougher to develop them, and tougher to get them into production. There's a lot of gold out there still, but they're going to be more and more difficult to find.
So do you think it is possible? I mean, since China and Russia, they've been purchasing a huge amount of gold, and they're starting this petro-yuan, which is supposed to be gold backed. The BRICS is starting the gold trading system. Is it possible to go back to a gold standard that we once had?
I don't know if we'll ever go back to that gold standard, fully gold backed currency. I think things have shifted too far away from that. I think there's absolutely no interest among governments to go that route, but I think we're going to see more importance in things that are backed by gold going forward.
And when you say things being backed by gold, what do you mean?
Well, I mean, like these, gold-backed petrodollars, that kind of thing. Sort of more, I guess, specific or boutique type currencies. I don't think we're ever going to see the U.S. dollar fully backed.